my guest for today, Mrs. Doris Ahiati, lead financial consultant and executive coach, John C. Maxwell certified coach, DISC accredited consultant coach. She's also a chartered accountant, a big woman indeed. Good morning and welcome.
Thank you very much, Francisca. Let me correct that, I'm a chartered banker.
So what's the difference? A chartered banker?
The content is slightly different. And so while one is focused on the operations of banking and the banking industry in general, one looks at the back office of accounting records.
I was actually hoping you say you guys chop the big money. Don't mind me, but welcome to Inside Pages. How have you been?
Thank you, I'm doing very well.
I like your hair.
Thank you, and I love yours as well.
Thank you. Just a bit of recap. This was 2015, 2016, where the Bank of Ghana conducted an asset quality review. What they discovered was that some of the banks had challenges with solvency, liquidity, and asset quality in the sector. Their response was to introduce a new minimum capital requirement of 400 million Ghana cedis by the end of 2018. The result? Market exits, mergers, about 9 banks had their licenses revoked. Some have asked if that was a prudent decision and if that's why we are now going to be paying 5% levy, known as the financial sector cleanup. Well, thankfully, we are joined by a guru, if I may say, Madame Doris, Mrs. Ahiati. Mrs. Ahiati, do you think that those measures that the government put in place, sitting here today and looking back, were prudent?
Thank you very much, Francisca. So we cast our minds back to that very action, I believe a very decisive one, to decide to clean up the sector. And the simple answer to your question is that, in my view, that was the right decision to take. Because it's like having a cancer. It eats up the system, and the banking system plays a very crucial role in our entire financial system as an economy. That's where money creation takes place. Credit, which drives economic activity in the economy, the value of the currency, is also connected to the economic activity, etc. Credibility, when it comes to portfolio flows, for foreign investors to actually appreciate and have confidence in our economy to say, we want to place funds here, will all be subject to the strength of our banking system. And at the time, I mean, if foreign investors are engaging, they would engage with players, professionals in the banking industry, etc. And it's the kind of thing, it's like a cork underwater. However hard you push it under, at some point in the future, it's going to pop up. So for me, that, I believe, was something that was going to reach a head sooner or later. We had managed to leave it untouched for some time. Professionals were discussing it in the background that something is not right in the industry, something is not right, until eventually that audit revealed that, no, we really need to take an action. And if you ask me, the government of the day had 2 options. Either to leave it as is or to do something about it. In my view, it's a bold decision to choose to do something about it. Was it popular? No, I don't think it was a popular decision. And like you write...
Because of the implications.
Yes, because of the implications. And you would have people that would decide that they are not going to give you their votes. There was a lot of agitation as the cleanup went on, and a lot of disaffection created. But the reality is that it was a painful decision that had to be taken, like surgery that had to be done in order to save the part of the body that is not rotten. And so we had to do it, very expensive. It cost not only people their businesses, there was huge levels of unemployment and other social issues, because there are, our societies, there are many people that are dependent on one particular income earner.
Were you personally affected?
Personally, I wouldn't say.
Or somebody close to you?
Yes, a lot of people close to me. I'm a chartered banker, which means I belong to the Chartered Institute of Bankers, the fraternity, associates, and fellows. Mm-hmm. And we had a good number of our membership either losing their job. We even had executives in the membership association who had either their bank's license suspended. And so it did really come home. It did come really close to us. And you see the enormity of the financial pressure that has been placed on them. You would know the lifestyle of the typical banker. And then,
My big sister is actually a banker.
right.
Yeah.
So you can see the shock if you find yourself out of jobs and you have people calling for opportunities for placements which were no longer there because we have fewer banks in operation.
How did the institute manage all of that? How has it been managing all of this?
So at the institute, we have the continuous professional development, which means that we are trying to see how we can diversify the skills of the banking professionals, especially to make it compatible with the requirements of the future of work. There's a lot of, fintech is the industry where you see a lot of growth these days. And so you may have lost your job with a mainstream bank, but there may be some fintech setup where transferable skills you would be able to contribute. And then through the CPDs as well, there's encouragements of entrepreneurship. We also got our act ascended by the president, and that gives us a number of opportunities outside of consulting to also provide some board secretary roles and all that. So these are opportunities that I believe have opened up to the banking professional following that tough decision, which I believe was taken just at the right time, because if we had left it to fester untouched so that it came to a head, I think it would have been more difficult to tidy up than taking a strategic view about it. When it comes to the implementation of that decision, that's another conversation. Was this the best way to implement it? And I believe when it comes to the strategy of implementation, there are many different schools of thought, including that maybe they should have taken a more human view to it. And taking a more human view to it, we are talking about could it have been possible to handhold some of the, especially indigenous companies, banks which were most greatly affected, so that you merge them or you support them with certain capital and maybe professional as well, technical support to ensure that they are able to right their wrongs. Would it have been possible in some cases to change the ownership shareholder, because we have CBG, which absorbed a number of the banks, for example. And you look at the structure of the bank and you ask yourself, okay, so boxing them up this way, was that the only way? As a design thinker, I always think that there could have been other ways of getting this
Such
done.
as?
For example, I believe as we speak, we have Omnibizic. And for Omnibizic's survival in there, I believe time was of the essence, where they probably had a little more time to get their acts together and reorganize themselves, as opposed to boxing them all up in a CBG and trying to create one big bank like that. So I believe that there could have been other ways, like what was afforded Omnibizic.
Some have said that the downside to this decision that had to be taken, a hard pill to swallow, the downside was that we no longer have the local banks that we had before. Why is that important?
It's important because, look, when we talk about the stability of the local currency, we always look at the implications of portfolio flows and the vulnerabilities that it exposes our economy to. And so if you have foreign banks, they are going to make profits. And those profits don't stay here because they are not locally owned. Those profits are going to be repatriated. And in the process of repatriating those funds, it has to be repatriated in the foreign currency. And if you look at our import-export dynamics, we don't generate that much supply of the foreign currency. And so we destabilize our cedi. So I believe that will be the angle that the advocates for more support for indigenous banks would be arguing from. And I think the other perspective may also be local content. If I'm a foreign bank and I have my policy internationally that requires me to only recruit certain caliber of people, to only procure my supplies along certain lines, there may be only so much that the locals would benefit from me. And even when it comes to the loan book, the industries that I would like to lend to, the cultural understanding of those industries, and that commitment to want to support a particular sector. On the emotional side, I believe that when it comes to the indigenous banks, that would be there, and it may not be so much there for the international banks.
Very well. I want to ask you about the cleanup process and whether or not in your opinion, it has been accountable. We know the minority in parliament had severally said that it was not accountable. It was not entirely transparent. But so, for instance, they want to know the details of some of the payments the receiver had to do, etc. Do you think that such a criticism is in line, or do you think that they've been accountable enough?
It's difficult to say whether they've been accountable enough or not. I understand the fact that this is coming back to the taxpayer to settle the bill. And therefore, definitely the taxpayer, represented by the parliamentarians, would want to see a lot more. And so there may be room for additional transparency if that call is coming from the floor of the parliament. I believe that there should be a little more room for
But for
that.
the industry, do you feel that there's the need for more transparency in how this has been dealt with?
Where I sit, I'm not sure what numbers have been privy to for me to determine that this is satisfactory or not. And so if we are judging this by how much I know, then perhaps I would say that I would love to know more. There's room for additional transparency. But I'm thinking about the fact that these are payments that are related to either banking customers or institutions or people that were dealing with the affected institutions.
Okay.
There's a receiver that has been put in place. In banking, there are levels of confidentiality that is required. But when it comes to ballpark figures, how easy is it for you to disclose such figures to the public? I believe that there could be more room. Where I sit, I've seen numbers being released for certain funds, for certain accounts, but for those that don't sit in my purview, the global picture, I don't have those numbers. And I would think that perhaps it's for confidentiality reasons that I'm only able to access information on the ones that relate to my own area of operations.
Okay. So today we are confronted with, indeed, what will be debated in Parliament, but the introduction of a 5% levy called the Financial Sector Cleanup Levy. This will be on profits of the banks. The question, or I'll take us back to a breakdown that the Finance Minister, Ken Ofori-Atta, did, saying that we had spent 21 billion cedis to clean up the sector, or in the process of cleaning up the sector. 13.6 billion Ghana cedis was spent on the resolution of failed banks, specialized deposit-taking institutions, SDIs, microfinance institutions, MFIs, CBG, and capitalization, and then Ghana Amalgamated Trust, what is known as the GAT. 5 billion was also used for fully paying all depositors' locked-up funds. 3.1 billion cedis, SEC investment into failed assets management companies. And today, we're told that we have to pay this 5% levy, or the banks have to pay it, but ultimately, the banks will relay that to customers. What's your reaction to this 5% levy?
It's
in a pandemic, and with all the other new levies that have been introduced?
It's a tough one coming from the industry, obviously, because it has implications for profitability, it has implications for cost of operations, it has implications for the rate at which we are able to grow the asset book, i.e. credit extended to a fledgling economy, the SMEs, which dominate our economic activity, economic activity sector. So it's a tough one. You look at it and you're asking yourself, how much can you pass on? In the past, our banks have been quite profitable. And so if that's the motivation, it does make sense for you to tax them a little more. And the other argument is the fact that We, the good boys that made sure we got our act together, are now being penalized because those that caused this crisis in the first place are no longer in operation, and we have to pay for them. It's a tough one, and I know that our industry is not taking it that easily or kindly. And I'm not sure to what extent there might be negotiations to secure additional buffers from elsewhere to ensure that the banks don't take a very hard hit. But it definitely is a tough one. That said, it's something that has to be done. You are aware that there's an additional 5.5 billion or so that has to be paid out, and so it has to be funded. And who can we rely on for that funding? And that's where it becomes difficult, and they go back to the banking institution to say, look, we need you to help us here. Does it make sense? I think as hard as it is, these are the actions that we need to take in order to ensure and safeguard the credibility and confidence in the banking sector. I already alluded to the fact that without confidence in the banking sector, you really don't have any economy at all. Your GDP is going nowhere because sika ye moja, and the banking industry is what is driving all this. And if people don't have confidence in the system and they are keeping their monies under the pillows, then we don't have the benefit of money creation, which stimulates money supply and the extent of activities and transactions that we are able to generate in the economy. So you don't want the banks to fail. And if this is the only way out, then it makes sense for us to go for it. But I'm not quite sure if this is the only way. Taxpayers have already been overtaxed. The companies and businesses we have in the economy are quite hit because of COVID, and they are trying to find a way to stabilize themselves. They need the support of the bank. At what rate is the bank going to now create assets, given this 5% that they have to be paying? Those are my concerns. And my concern is that if the intent is to beef up revenue mobilization, it could turn around to be a little counterproductive, because you may have a situation where the bank, as a result, is not able to create good assets, and therefore businesses are not able to access credit that would drive their growth and recovery, and therefore their own contribution to the revenue envelope will be curtailed, and then it comes back to hunters. So these are my thoughts.
Okay,